business, and members of Parliament have trashed the proposed 7-point memorandum of understanding by the Kenya Bankers Association and the Central Bank of Kenya to cut lending rates by 100 basic points, stating that the M.O.U. is designed to mislead the president into not signing the bill. The MPs led by the bill's proponent, Kiambu Member of Parliament Jude Njomo, urged the president to sign the bill into law.
Parliament seemingly want nothing to do with the memorandum of understanding between commercial banks and their regulator, the Central Bank of Kenya, seeking to self-regulate on the issues of interest rates.
Those banks are up to nothing but to deceive you with those memorandums. They have done it in the past in commitments which were not met. We want interest rates back to 14.5%.
This barely a day after the umbrella body of lenders, the Kenya Bankers Association, said it sought to offer practical solutions to interest rates while still retaining free market principles that are currently enjoyed by the private sector.
It's not a legally binding document, but clearly when you make a pledge or commitment to your regulator in the glare of the public, it is certainly something that you will take very seriously.
Lenders have agreed to set aside a combined 30 billion shillings to improve access to capitalize SMEs at concessionary rates.
There is a down payment that we have made, an immediate commitment that banks collectively in Kenya will put a pool of 30 billion shillings, which will be offered to the SMEs at concessionary rates that will not go beyond 14.5%, which is quite concessionary. Then out of the 30 billion, 10 billion is earmarked for women.
The central bank has come out in tacit support so long as banks show clear commitment.
Banks only report when things are getting worse, in a sense to punish you as a consumer, and do not report when things improve, meaning when you have you make your payments quickly or whatever else it is, then the whole framework falls apart.
MPs, however, urge that should the bankers be genuine in their undertaking, they should then make presentations to Parliament.
We are wondering whether this is a genuine change of heart by the bankers, or it's a knee-jerk reaction to try and persuade the president not to sign the bill into an act.
With the banks now seemingly pinned between a rock and hard place and MPs holding their ground about legislating an interest rate cap, consumers of credit can breathe easy because finally the thorny issues of exorbitant interest rates and opaque bank charges are finally front and center. Ashley Mazuri, KTN Business.